Okay, welcome back. We're going to continue lesson 5 of the Cashflow Quadrant summary. So here we go. This is a very exciting chapter, as you can see from the screen. How do I get rich? Everybody's asking that question, right? So here we go. Define wealth beyond money. Kiyosaki explains by explaining the true wealth is measured not just in money, but in time. Wealth is the number of days one can survive without working, still maintain their lifestyle. So this is important, but in time, he says right here. And what he's saying is that wealth is always, people think of big houses, ritzy cars, and all this ritzy stuff, diamonds and the bling bling and all that stuff. But guess what? Wealth is measured also in time. Time meaning you can do what you want, where you want, when you want. That is also wealth. It's called time freedom, quality of life. Let's continue. The pathway to financial freedom, he emphasizes that to get rich, one must prioritize passive income over active income, shifting from the employee and the self-employed and the S quadrant to the business B owners and the investor in the I quadrant. So there's a shift you can see here. Getting rich is not just putting more money in your bank account. It's money coming in even when you don't have to work in it actively. Makes sense? We'll talk about that as we go. Build passive income streams. Kiyosaki advises readers to focus on assets that generate passive income, such as businesses, stocks, bonds, real estate. He highlights that this shift allows individuals to gain financial freedom without constantly trading time for money. You see what you're doing? You're trading another resource other than money to make wealth happen. Let's continue. The importance of mindset education. He insists that anyone can achieve financial freedom by developing financial literacy and adopting the mindset of a successful investor. Financial education is the key to understanding the leveraging of assets effectively. There you go. So assets are some things like you can see maybe in your mind, and you can actually see them in real life, but they generate an income. It's like a machine. Let's continue on. Call to action. Kiyosaki readers, let me move it up here a little bit. You can see the control of their financial future by actively building and investing passive income streams, leading to long-term wealth and independence. So long-term wealth and independence is like a stream, like a conveyor belt, something that keeps moving without you touching it, and the product or the information is moving along without you getting involved in it. That's what you call passive income. It's past you. In other words, it's coming through into your bank account. You're not physically there lifting it up, bringing it into your bank account, like a job, for example. Let's continue. Now, chapter 9 talks about be the bank, not the banker. This is very important. Adopt the investor's mentality here, mindset. Kiyosaki explains that to achieve financial wealth, one must think and act like a banker, like the bank. Banks use money to generate profit, which serves as a model for individual investors. So when you use money and you put it into something that generates income, you're now an investor. Let's continue. Leveraging debt for wealth. He introduces that the concept of good debt used to acquire income generating assets. I love this. Debt used to acquire income generating assets versus bad debt that drains resources. Here's an example that I'm going to give you. A good debt and bad debt. Putting money into a business that goes up in value, that's good debt, because the value of the business is going up because leads are coming in, customers are coming in your door, and they're buying products or services from you. That money's coming in, and what are you doing with that money? You're paying off the debt. That's called good debt. Even though the debt may be 20%, 30% sometimes. Would recommend you stay away from that high debt, but keep this in mind. If you borrow, let's just say $1, and you have to pay 50% interest, but that dollar within a short period of time gives you back $2, is it a good investment? Absolutely, because from $1, you got back $2. Yes, you paid 50% interest, you still netted $50 or 50 cents. That's an example of good debt. Bad debt is something you borrow and go on a vacation, for example, or you buy a watch, or you buy jewelry or something that goes down in value because over a period of time it's worth less furniture, clothes, things that we consume, then if you borrowed money doing that, that is called bad debt. You don't want that to happen. Understanding utilization of good debt can accelerate wealth building. We're going to get into that in the future chapters. The power of compounding interest and leverage. Kiyosaki discusses the power of compounding as a tool for investors, urging readers to invest in assets that grow over time. This is how banks profit. The individuals can replicate the strategy to grow their own wealth. So taking money, putting into a business or putting into marketing, something that generates leads, for example, if one customer is, for example, worth $10,000 to you, but it costs you $5,000 to obtain that customer, that is still a good investment, but you got to be careful not to overspend on your marketing. We'll talk about that later on. The risk of reward and financial leverage. He advises that leveraging resources such as loans or investments can maximize returns if managed wisely, but he also cautiously against excessive risk, stressing that financial education is crucial to navigate leverage successfully. I'll give you an example of what he means by this. Let's say you borrowed $10,000 to start a business, and the ROI on that $10,000 is, let's say, $50,000. Not a bad return, 5 times, right? $10,000, you get back $50,000 in 1 year. But here's another way. You increase your risk. Let's say in that business, if you wanted to add more things involved in there, a better system, or hired more employees, or you got more coaching, whatever the case may be, and you were paying $25,000 instead of $10,000, okay, that's more money out of your pocket. Yes, we know. But the return on that investment, let's say, is instead of 4 to 1, it's like you had it before, 5 to 1 return on the 10,000 to 50,000. But let's say the return on that one, on that 25,000 you invested in, you got back 200,000. Okay, that's almost 10 times as much. That's 8 times as much, roughly. So think of it this way. Yes, when you spend more, you get a higher return because you have more systems in place, better controls. You have more people maybe working for you. You are able to market to other areas. Maybe there's bigger campaigns you could do. So leveraging money to make more money. That's what he's talking about. Very powerful stuff. All right, let's wrap up here. One more. Transforming into an investor. By thinking like a bank, using resources strategically, individuals can obtain financial independence and create a secure future. Kiyosaki encourages readers to be the bank by building a mindset focused on growth, leverage, and strategic investment. Chapters 9 and 10 are highly motivating, guiding readers to rethink wealth building as a strategic process. Kiyosaki insights as a passive income, leveraging assets, using bank as a model, as a blueprint, empowering readers to take decisive steps toward financial freedom and security. All right, here's an example. What he means by being the bank. If you were the bank, what would you do? You would take people's money, obviously, and put it in the bank. They would put the money in your bank. You would lend it out at a percentage so that way you make money. So you're giving the people who are giving you money maybe 1 or 2% return while you're lending it out to somebody who needs the money, maybe a business, for 10 or 15%. So you don't have to do that like the bank, but what you can do is borrow the money from the bank and use it into a return, an ROI, like I just gave you an example earlier, that's 5 to 1, 6 to 1, into a business, into an asset that grows. So I hope that makes sense. Now, one of the things I want to do is give you a little exercise so we can plan for this. Remember going back to the chapter 9, chapter 8, how to get rich? One of the things what most entrepreneurs fail to do is set goals. And I'm going to give you a question. I'm going to send this out. It's going to be on this link, okay? And you can just copy it, and I'll show you what it looks like. Here we go. So this is what it will look like. It's called Goal Second Setting Document. So make sure you make a copy of this so you can have it on your own computer. And what you'd like to do, this is for you. This is not for me. This is for you. Is you write your name and your date down, the day you're writing this down, the desired income goal you want to make in 30 days. Let's say you're starting today. Your goal maybe is to make an extra $5,000 in 30 days or $2,000. Set a realistic goal. Then break it down. But the best way to do this is do reverse engineering. Write your 1-year income goal, your 12-month first. So your 12-month comes out first. Let's say it's $100,000 you want to make in a business. You break it down, what that means to you per month. So if your goal is to make $110,000 or $120,000 per month, that comes out to about $10,000 a month. So by the 90-day goal you want to put as a $10,000 per month, because if you stay at $10,000 a month after 90 days, you're certainly going to hit $120,000 in 1 year. And what does that mean in 60 days? Slice it in half. Put it $5,000. And what does that mean in 30 days? Slice it in half again. That's $2,500. By having increments goals, you know exactly how many pieces of product or services you need to sell to hit that goal. I'll give you an example. Let's say you're doing marketing and you're selling a product for $100. Well, for you to make a profit of, let's say, $2,500, or your income, let's say you're marketing a product for $100 or $200 and it's making a profit for you for $100. That means you have to sell 25 units to hit that $2,500. So make sure you do that. All right. And then write down why you're doing this purpose. And I want you to write this down as if it's already happened. First one, it could be, I'll be able to quit my job, be able to work from home. Second thing would be, with this income, I'll be able to have more time with the family. Third one could be, I could donate more to my church or to my whatever charity you want. Whatever those top 3 reasons are why you're doing this. And write them as if it's happened already. This is very important. We'll talk to you more in videos about mindset and why that's important, and manifestation. We're going to get into that later, but this is very important to do this. Sign on it. When you sign your name on a piece of paper, you're subconsciously getting more committed to doing this. So make sure you do this. I'm going to post this link here at the bottom here. So click it and make sure you do this. And this is for your exercise. This will definitely help you. What I'd like you to do is take this document and then put it where you can see it every day, what your goals are. And this will help you to focus on what activity you need to do to hit your goals and your visions. All right. Well, thanks for being here. Make sure you put a thumbs up and share this video and all the good YouTube-y stuff you guys do. I'll speak to you again on the next lesson. Make it a great day.